Hi everyone, welcome back to Corporate Decoder. Today we're diving into a report from Coeur Mining, and let's just say there's more than meets the eye. It's like finding fool's gold. Looks valuable at first, but we need to dig a little deeper to see what's really going on. Coeur Mining just filed what's called an 8K report. Think of it as an OPE, so we need to tell everyone something important, kind of document for the stock market. This one is dated March 26, 2025, so it's pretty fresh off the press. The main story here revolves around a settlement. Coeur Mining was in a legal battle with a company called Mavericks Metals. It was about a royalty, which is like a percentage of the money Coeur Mining makes from one of their mines, the Kensington mine. These sorts of issues between big mining companies are surprisingly common and often very expensive to resolve. To make the legal problem go away, Coeur Mining agreed to give Mavericks some of its own stock, like giving them a piece of the company. Specifically, they handed over 595,267 shares of their common stock. The value of these shares adds up to $375 million. Now, this wasn't just a gift, it was part of a larger agreement to settle past debts, specifically for production before the start of 2024. It's kind of like saying, here's some stock to cover what we owe you from before. There's mention of a legal opinion from a law firm called Gibson, Dunn and Crutcher LLP. This opinion basically says that the stock Coeur Mining gave away was okay to give away according to the rules. It's a formality, but an important one to make sure everything is above board. Now, what does all this mean for Coeur Mining? Well, settling lawsuits is generally a good thing. It removes uncertainty and allows the company to focus on mining. However, giving away stock dilutes the value for existing shareholders, meaning each share is now worth a tiny bit less because there are more shares floating around. It's like cutting a pizza into more slices. Everyone gets a smaller piece. From the settlement, it seems like Coeur Mining determined settling the case outweighed the cost of continuing to fight it in court. Companies have to make choices like this frequently based on risk analysis. So what's my take on Coeur Mining after reading this report? First, the company seems to be actively managing its legal risks, which is a positive sign. Lawsuits can be a huge drain on resources, so resolving them is often a smart move, even if it means giving up some equity. On the other hand, it's never great to see a company have to dilute its stock. But in the grand scheme of things, this seems like a relatively small price to pay for resolving a potentially bigger problem. The value of the royalty, which is what was in dispute in the first place, is probably pretty significant to Mavericks and therefore of considerable cost to Coeur Mining. Looking ahead, Coeur Mining's success will depend on how well it manages its mining operations and keeps costs under control. The price of gold and silver, which are the company's main products, also plays a big role. It's a tough business, but Coeur Mining has been around for a while, so they must be doing something right. There you have it, Coeur Mining settlement explained in plain English. Thanks for watching. If you found this helpful, please hit that like button, leave a comment and subscribe for more corporate deep dives. Until next time.